What's up, you guys, and welcome back to another exciting episode of Finance Success. My name is John, and you came here for the news. Today we're not diving into crypto, but we're looking behind the scenes, and we're going to dive right back into history, and I'm going to be explaining one of the biggest catalysts for why we see the wealth inequality within the United States. So, if you like that, without further ado, let's dive right into it. So now, in 1971, this was a massive change in the economic policy of not only the US, but the world. So what happened in 1971, you might ask? Well, that was the year Richard Nixon took the US off the gold standard. So now, no longer are the dollars backed by gold. In fact, they're not backed by anything except for the faith in the government. So now, let's just see what kind of implications this had going forward. Well, in 1971, you could see that the compensation and the productivity growth was relatively the same and grew at a constant rate. And from there, it completely changed, where our compensation roughly stayed stagnant. It went up a little bit. I'm not going to say it didn't go up, but the productivity, compared to productivity, it's just nowhere near the same level. Another thing that happened was we saw the median male income stay the same, kind of constant, while our GDP per capita went up. In the same time, one could say that the median female income also went up, along with the real GDP. And you also got to remember, this was at a time when women didn't really have as many rights as they do today, and it's only been growing since there. So, of course, the female income's going to go up. So, but it still has had a pretty big different gap. Like that, it grew since then. So, like, that just proves further my point. Another one you could look at is how the income inequality has grown. If you look at the top 5%, their income every year, their real income, went up pretty substantial from there. It looks like almost 60 to 70 to even 80% increase. I think this was taken in 2016, so it's 4 years old. Whereas the median and even the lower class, they did not see their income go up by that much. Like, since 1970, we've had a lot of things change, a lot of technological advances, and it seems like the average everyday person is not getting their fair share in that. You see how the working hours to buy the S&P was once below 30 for many years, and then quickly changed after 1971 to where we're at today of almost 120 working hours just to buy an index in the S&P. So a lot has changed, let me tell you. We've also seen the CPI for electricity, food, and fruit gone up substantially, whereas before it was relatively stagnant. And if you don't know what the CPI is, it's the Consumer Price Index. It basically takes all the prices of electricity, a basket of food, a basket of fruits, and it measures it. Now, this is how they measure inflation. They use more than just this. I don't even know if they use some of these metrics, but that's generally the concept. And you could see by that metric, inflation has gone up substantially since then, and not really the wage. We've seen the federal surplus and deficit just go absolutely AWOL since then, with massive deficits in our spending. We've seen the U.S. debt prior to 1940, and this was during the World War II, so we needed more money to help fund the war, after all. We funded it by debt. But since 1970, the growth rate of our debt has gone up exponentially. This graph left off at $23 trillion, if you don't know. Whereas now it is, let's go to 2020, $27 trillion. We've increased our national debt by $7 trillion in a matter of 4 years. Good job, America. Let's see what other crazy things have happened since 1971. Well, considering the US dollar is no longer backed by an actual asset, inflation just has skyrocketed since then. Now, before that, there still was inflation, but that's because, we're digging gold out of the ground every day, but not nearly at the rate as the US government is printing our US dollar out of existence. We've seen since then the top 1% and the bottom 90% wealth growth has completely went AWOL since the 1940s. And you see that the top 1% in the last decade or so have just, their percentage wise has gone up significantly. And I don't think it's just because of what happened in 1971. I think it's also having to do with the factor of technological advancement, getting rid of, jobs and wages and kind of lowering it. Now, that's not to say that this is the sole reason for what has happened in the last 50 years. Or 30 years, I should say. No, actually 50, yeah, I'm right. Another thing we have to look at is this graph. Now, it seems there was a U-shaped wealth concentration of the top 1.1%, and it's been generally the same as 1913. And you might say, well, then doesn't that negate everything you just said? To some extent, maybe. You could also have to remember that back then, there's a lot of things different than how today is. Back then, we've seen really bad working conditions where if you didn't like your wage, you better get out and go on the streets because the corporations aren't going to like that. We saw child labor laws starting to be enacted during this time period because the working conditions were just absolutely brutal during this time period. Now, so let me just say what happened because I showed you all the information and all the graphs, but I didn't explain why. So, what happens when you change a fundamental shift in the way America operates? We went from a completely savings-based economy to overnight a debt-based economy. And what does that mean? Well, after all, you know that every time you print another dollar, there's inflation with that, and because the value of those dollars are worth less and less. But what you might not realize is that when this happens, we see people trying to hedge against inflation. And they put their money into inflation-resistant assets like gold, silver, real estate, stocks, basically something with underlying value. And so the rich normally hold these assets. And so when you take it to this based economy, those values tend to keep up with inflation. Actually, they increase with inflation more than that. And this is why we've seen after all of our federal stimulus that's happened over the last 6 or so months with the coronavirus, that's why we saw in a matter of, I think it was 2 months, all the billionaires, I think just in the US, gained $100 billion of net worth in a matter of 2 months. Whereas the working class person was kind of having struggles to scrape by, and that's why we needed the stimulus. Another thing you have to look at is who are the top 1%? The top 1% own assets. They own businesses. If you look at it, like all the really successful people out there own businesses. And why is it good to own a business when there's inflation? Well, if the US dollar is worth less and less and less every year, what do? I could just increase my prices. It's not that big of a deal for me. So it kind of goes up. Whereas the wages of the workers, you'd be lucky to see a 2% wage increase. I know my parents are always aiming for 2% increase a year. And I'm like, that doesn't keep up with inflation. And it doesn't. So when that happens, all it does is, the way our economy works, every time a new dollar is printed to help the poor, it just hurts them in the end. Because not everyone's getting a 2% wage increase every year, whereas companies can charge that easily. And that's why we've seen, since the coronavirus has happened, we've seen prices in food absolutely skyrocket in some regards. So the inflation is coming, and you just have to wait for it. So that's probably why our compensation has gone up a little bit, but not nearly as much as our productivity. Because back then, a company would have to really carefully consider if they're going to give you an increase. And they would do it because, after all, it's always backed. So you're always going up as the productivity goes up in the country. And whereas now, if it's based off of fiat, meaning not backed by anything, your wages just diminishes. If you're working a job that makes maybe $10 an hour, you'd be lucky for a quarter raise. And that's just kind of pathetic nowadays. So now you might be thinking, why would we ever get off the gold standard? After all, you saw the massive implications it had for the US going forward. And the answer to that is really not that simple. The reason why we were taken off the gold standard, there was a couple premises of thinking behind it. The first being that not being backed by gold makes it so people are more incentivized to take out loans than they normally would have. And the reason for this is because debt is actually diminished over time. So now we have companies who are taking out more loans to help operate and grow their business ventures, which in a sense promotes economic growth for the whole country. Just imagine where we would have been if Facebook or Google did not receive the funding that they would have if it wasn't for this debt-based economy. Furthermore, companies now don't have the burden of deciding whether a person deserves a raise. Because if you gave someone a raise and we saw a deflationary event, that would decimate the business in a whole. So, in their mind, some inflation is actually good, and you could do that and manipulate the amount of inflation if we weren't backed by a hard asset like gold. Also, during 1971, since the US was the last country to be on the gold standard, we saw a lot of these countries realizing they had a lot of dollar denominated debt. And so they might as well just convert that to gold. Because after all, every country values gold. Not every country values the US dollar. So a lot of these countries around the world were trying to cash in on the fact that they had US dollars sitting around. And were trying to convert it into gold. But the US didn't like this so much because we had the most amount of gold around the world. And so, considering that gold is the truest money in almost every single country around the world, it would put us at a massive advantage if we were to decouple gold and the US dollar. So, that was also part of the thinking behind taking the US off the gold standard. So, what can you do in these types of scenarios? Well, the rich own assets. Really, you have to own assets that are resistant against inflation because that's the only true way to get ahead in our debt-based economy. So, maybe you should buy real estate. Maybe you should buy some stocks. I mean, after all, I'm not going to say buy stocks. After all, you see the prices in the stocks are just completely absurd. But maybe it's time to look into gold, silver, or even Bitcoin. I love Bitcoin for that matter. It's a completely different currency that can't be devalued. Better yet, why not just take out a loan? This is like the absolute perfect time to take out a loan. We've seen interest rates at an all-time low, and we're also living in a debt-based economy. Inflation will just eat away our debt and make it that much easier for us to make profits. So, go out there. That's all I had for today. If you found it informative, please give it a thumbs up. It really helps a lot. I haven't been getting a lot of views lately, so it would mean a lot to me if you could do that. But seriously, comment down below on what video I should do next. Peace out, and I'll see you guys in the next one. Hey, did you like the video? If so, I'm glad to hear it. I have more videos coming out every week, twice a week. And if you want to see the next one, Just click the link right over here.